The moment I walked into the Hamptons estate, Marcus Webb turned pale, but not because he recognized me. He was laughing, his champagne flute dangling from his manicured fingers, telling everyone within earshot about a pathetic client who couldn't qualify for a $500,000 mortgage. That client was me. And what he didn't know was that AITA just liquidated $180 million in commercial real estate that morning, and I was standing right behind him. My name is Victoria Sterling. I'm 39 years old, I own 347 properties across the United States, and I've never borrowed a dime in my life. But 3 months ago, I walked into Marcus Webb's mortgage brokerage firm with a simple, straightforward request. I wanted to finance a $2.4 million beachfront estate in the Hamptons. Not because I needed the money. I didn't. I wanted to test a theory, to see if the American mortgage system would still gatekeep wealth based on credit scores and employment history rather than actual net worth. I wanted to see if a successful woman in real estate would be treated differently than a man with the same portfolio. The answer had been a resounding yes. And it was infuriating. What Marcus didn't understand, what he could never have understood, given his limited vision of success, was that I'd been building my real estate empire for 16 years while men like him were still figuring out how to tie their Italian loafers. I'd started with a single duplex in Brooklyn, purchased with a combination of savings and a hard-won small business loan from a bank manager who actually bothered to look at my spreadsheets. That first property had generated enough cash flow to purchase 2 more. Those 3 had financed 5 more. Within 5 years, I was acquiring commercial properties. Within 10, I was developing entire building portfolios. By the time I was 35, I'd already generated over $400 million in total acquisitions. I didn't advertise this. I didn't need to. My accountants knew. My lawyers knew. The people in the real estate development world knew. But to someone like Marcus Webb, someone who'd spent his entire career in the narrow, gatekeeping world of traditional mortgage finance, I was just another woman with some properties and an inflated sense of self-worth. I'd walked into Marcus's office on a Tuesday morning in September. The office was all glass and chrome, with floor-to-ceiling windows overlooking Manhattan. Modern art hung on the walls, the kind that probably cost more than most people's homes. Massive sculptures caught the light from every angle, and I recognized at least 2 pieces I'd seen at auction at Christie's. This man spent money on things. He just didn't want to help other people make money. Marcus himself was exactly what I'd expected, a man in his mid-50s, bleached teeth that seemed to glow under the fluorescent lighting, a Rolex Submariner that caught the light with every gesture, and the kind of confidence that only came from a lifetime of holding the keys to American wealth. He wore a navy suit, custom-tailored, obviously, with a pale blue shirt and a Hermes tie. His office smelled like expensive cologne and old money, a mixture of cedar, leather, and privilege. "Miss Sterling," he'd said, shaking my hand with exactly the right amount of pressure, not too firm, not too weak. The practiced grip of someone who'd been taught that handshakes mattered. "Please, sit down. Walk me through your situation." I'd sat in the chair across from his massive mahogany desk and handed him a folder. Everything was pristine: documentation of property ownership across 12 states, liquidation records from the previous fiscal year showing $180 million in commercial real estate sales, bank statements showing 8 figures in liquid assets distributed across multiple institutions, tax returns showing 7 figures in annual income from property management fees, rental income, and capital gains. I'd prepared this folder with the same meticulous attention to detail I applied to every business decision. Every page was tabbed. Every figure was verified. Every document was certified. "I'm looking to finance a residential property," I'd said, keeping my voice level and professional, the way I always did in business meetings. "Purchase price is $2.4 million. It's a beachfront estate in the Hamptons. I want a 30-year fixed mortgage at current rates." Marcus had flipped through the papers slowly, his expression shifting from interested to patronizing in the span of about 30 seconds. I'd watched his eyes scan the numbers, watched him make calculations in his head, watched him come to a conclusion that had nothing to do with the actual data in front of him. "I see you own some properties," he'd said, emphasizing the word "some" in a way that made it sound trivial, like I'd mentioned owning a couple of duplexes instead of a diversified portfolio worth nearly $500 million. "But this isn't really how it works, Miss Sterling. We need W-2 employment, verifiable income from an employer. What you have here," he'd tapped the folder dismissively, as if it were a napkin someone had left on his desk, "is a lot of passive income. Passive income doesn't qualify in our underwriting matrix." I'd felt my jaw tighten slightly, but I'd kept my expression neutral. This was exactly what I'd expected. This was the entire reason I'd come. "My liquid assets are in the 8 figures, I'd said quietly, not defensively. "Just stating fact. My annual income from property management alone exceeds $800,000. My tax returns document this clearly. That's page 7 in the folder. Yes, but it's not employment income, he'd repeated, as if speaking to a child who'd asked why the sky was blue. It's speculative. Passive. What if the market crashes? What if your tenants stop paying rent? What if the real estate bubble bursts? We can't base a mortgage on maybes and hypotheticals. You're welcome to pay cash for the property, of course. That would be the smartest move financially. But if you want to finance it through traditional lending channels, you'd need to show traditional employment income. Do you work for a company? Any W-2 positions? A corporate job that would verify your income through an employer. I hadn't wanted to tell him that I'd owned my own real estate development company for 16 years. I'd wanted to see how far he would push this narrative that my wealth, documented, verifiable, substantial, somehow didn't count because it wasn't on a W-2 form. I'm self-employed, I'd said. I've been in real estate development and acquisition for 16 years. I own a development company. Marcus had leaned back in his chair, and I'd watched him make a decision about me in real time. It was like watching someone look at a painting and decide it wasn't worth their time. The calculation was visible on his face: self-employed woman in real estate. Check. No institutional affiliation. Check. No corporate salary. Check. Ergo, not bankable. Self-employed, he'd repeated, nodding slowly as if that explained everything. That's much tougher, Miss Sterling. Much tougher. We typically need 2 years of business tax returns showing profitability, along with personal bank statements, business documentation, evidence of business licenses, that sort of thing. Do you have all of that? I do, I'd said. I have the last 10 years of documentation. He'd looked at me over his reading glasses, and I'd seen the moment he'd made his final decision. It was the look of someone who'd already written the ending to this story and didn't want to hear the middle. You know what, Miss Sterling? I think you're going to have an uphill battle here. Most lenders are very conservative with self-employed applicants, especially in real estate. The market is volatile. Properties can flood. Neighborhoods can change. Tenants can default. You might want to just purchase the property outright. Save yourself the hassle. Save yourself the rejection letters. He'd stood up. The meeting was over. He'd stood up and walked toward his office door, implying I should follow him out. That's it? I'd asked, not moving from my chair. That's it, he'd confirmed, opening his door. I'd recommend liquid savings or a private lender if you really want to finance. But a conventional mortgage from a major bank? I'd say your chances are about 10%. The system just isn't designed for people in your situation. You're welcome to submit an application if you'd like, but I don't want to waste your time. And I don't want to waste my firm's resources on an application we both know will be denied. I'd left his office and never looked back. I'd walked down to the street level, exited onto Park Avenue, and I'd called my real estate attorney from the sidewalk. By Friday of that week, I'd purchased the $2.4 million Hamptons estate in cash, outbidding 3 other buyers who all needed financing. The property had closed in 30 days, a remarkably fast closing for a property of that size. Marcus Webb's firm would have made approximately $72,000 in commission on that mortgage. He'd turned it down because my success didn't fit into his predetermined boxes. And now, 3 months later, here he was at the Whitmore's annual charity gala, one of the most exclusive parties in the Hampton social calendar, telling everyone within earshot exactly how delusional I was. She had maybe $5 million in property, he was saying to a small cluster of guests, his voice carrying easily across the marble terrace. Thought she could flip it into a mortgage for a house she couldn't possibly afford. I told her the truth, she needed employment income. Real income. Not just being married to someone successful and hoping his money would carry her through. The assumption that my wealth came from a husband made my chest tight with rage. But I kept my expression neutral. I'd learned long ago that the most powerful response to disrespect was patience. I'd learned that letting people finish their performance often revealed far more than interrupting them ever could. That's not what happened, said a woman's voice. It was Margot Whitmore, the gala's host, a woman I'd known for 12 years and who watched me build my empire brick by brick. Margot had been there when I'd first started acquiring commercial properties. She'd been there at auction houses, at development meetings, at closing tables. She knew exactly who I was. Victoria Sterling is here, actually. She just arrived about 20 minutes ago. I watched Marcus's face go white. Watched him search the crowd for me. Watched him calculate, in real time, exactly how much of this conversation I'd heard. His eyes darted from face to face in the crowd, searching. And then they landed on me, standing near the French doors that opened onto the terrace, holding a martini and wearing a black Valentino gown that had cost more than Marcus's car payment. When his eyes found mine, I smiled. Not a warm smile. A smile that said I'd heard every word, and I was going to enjoy this moment far more than he was going to enjoy the next conversation we were about to have. I set down my martini on a passing server's tray and walked toward him slowly, deliberately. The party seemed to pause. People sensed something. They always do when a reckoning is coming. It's like the air changes. The energy shifts. Conversations tapered off as I moved across the terrace. "Marcus," I said warmly, extending my hand as if we were old friends reconnecting at a reunion. "What a coincidence. I was just thinking about you. I heard you've been telling quite the story about our meeting at your office." He shook my hand, and his grip was clammy, nervous. "Victoria. I didn't. Margot said you'd just arrived, but I wasn't expecting." "You thought what?" I asked pleasantly, my hand still in his. "That I wasn't here yet? That I didn't hear you tell everyone I was delusional and married to someone successful? That somehow I wouldn't find out about this conversation?" I released his hand and stepped back, letting everyone around us have a clear view. "That's so funny, because I'm actually neither of those things." He tried to laugh it off, the way men like him always do when confronted with uncomfortable truths. It was just a case where the numbers didn't work out. Nothing personal. You know how it is in the mortgage business. We have underwriting standards. The system has requirements. "Oh, I know it was nothing personal," I said. "That's what made it so interesting. 3 months ago, I walked into your office with 8 figures in liquid assets, pristine documentation, a verifiable track record of success spanning 16 years, and a straightforward request. You turned me down based on the fact that my income came from self-employment rather than W-2 employment. Do you know why I actually came to see you?" Marcus shook his head, not trusting himself to speak. "I came to see if you would recognize real wealth when it walked into your office," I said, my voice still pleasant but with an edge underneath it now. "Specifically, female wealth. Wealth that didn't fit into your predetermined categories. Wealth that didn't come with a corporate badge and a benefits package. Wealth that had been built through 16 years of strategic acquisition and business development." And the answer was a resounding no. "You saw a woman in real estate and decided I couldn't possibly understand finance. You saw self-employment and decided it was inherently unstable. You saw success that didn't match your template and rejected it without even considering whether your template might be flawed." I stepped closer, lowering my voice so that only he and the people immediately around us could hear, though I knew word would spread. "That property I wanted to finance? I purchased it for $2.4 million in cash. I closed in 30 days. The sale of 3 other properties that same week brought my liquid holdings to $210 million. So I want you to understand something very clearly. I didn't need your mortgage. I never needed your mortgage. I needed you to prove my theory, and you did it beautifully." The color had drained from Marcus's face completely now. His champagne flute was trembling in his hand, and I watched it slosh slightly. "But here's what you should really know," I continued, my voice taking on the tone of someone sharing important information at a business meeting. "After I walked out of your office, I did what I do with every industry that interests me. I infiltrated it. I studied it. I learned its weaknesses. I identified its systemic problems. And then I decided to do something about it. 3 weeks ago, I purchased Coastal Financial Partners, a mortgage brokerage firm based in Boston with $3.2 billion in annual originations. They have offices in every major city in the country. They employ 47 loan officers. They have relationships with every major bank and institutional lender in the United States." Marcus started, but I held up my hand. "Let me finish," I said calmly. "As of this morning, their new corporate mandate went into effect. All loan applications from self-employed applicants are now reviewed by a dedicated committee that specializes in alternative income documentation. We're re-implementing a new underwriting matrix that recognizes passive income as legitimate income if it's been verified for a minimum of 5 years. We're also implementing comprehensive diversity training and bias awareness programs for all senior loan officers. Because it turns out, Marcus, that a lot of applicants, particularly women and minorities, were being rejected for discriminatory reasons, not legitimate financial reasons. We're fixing that." Marcus stammered, his voice barely above a whisper. "You can't just." "I can," I said simply. And I did. My company is now the 4th largest mortgage brokerage in the country. We're launching a national awareness campaign next month about bias in lending practices. I've hired a very thorough investigative team, and we're looking into the lending practices of every major broker in the industry. Your firm's file is particularly interesting to our analysts. You've rejected 92% of self-employed female applicants over the past 5 years, while approving 68% of self-employed male applicants with nearly identical financial profiles. That's a 30-point spread, Marcus. That's discriminatory, and more importantly, it's illegal under the Fair Credit Reporting Act and the Equal Credit Opportunity Act." The party had gone completely silent now. Everyone was watching. This was the kind of social demolition that would be discussed at every country club, every dinner party, every power lunch in Manhattan for the next 6 months. I have documentation of everything, I continued, my voice steady and factual. Your internal emails, your sales practices, your decision matrix. I have 15 lawyers who specialize in financial discrimination, and I'm very patient. The mortgage industry is about to have a very uncomfortable year because of people like you. People who let their biases determine who gets access to capital and who doesn't. People who gatekeep opportunity based on outdated ideas of what success looks like. I lifted my martini from the server's tray again, took a slow sip, and set it down. But I just wanted you to know personally, I said, my eyes meeting his directly. It was nothing personal. It was just business. And in business, we call that a hostile takeover. I turned and walked away, leaving Marcus Webb standing in the middle of the Whitmore's gala, his career imploding in real time, while the entire room watched and whispered. Within 2 weeks, the news had broken. The investigative journalism team AITA hired broke a story in the Wall Street Journal and Bloomberg about discriminatory lending practices across the entire mortgage brokerage industry. Marcus's firm was named specifically. The SEC opened an investigation. The Department of Justice opened a separate investigation under fair lending laws. By the end of the month, Marcus had resigned under pressure from his board, his firm had settled with federal regulators for $47 million, and the entire industry was scrambling to restructure their lending protocols. My team launched our new underwriting initiative with significant fanfare. We held press conferences. We issued statements about fair lending practices. We published data showing that self-employed applicants with our firm were approved at rates comparable to W-2 employees when their financial documentation was thorough. We made it national news. The irony wasn't lost on me, I'd gotten my mortgage after all. Not from Marcus, and not because I needed one. But because I bought the entire brokerage industry and forced them to approve loans for people like me. My $2.4 million Hamptons estate now had a $2.1 million mortgage attached to it, financed through Coastal Financial Partners at a rate of 2.1%. It was currently listed as a case study in our company's training materials for alternative income documentation. The interest rate I'd negotiated was the lowest rate any borrower had ever received from my company. It was a detail I paid close attention to. I paid the mortgage payments electronically every single month, exactly on time, from a separate account I'd set up specifically for this purpose. Every payment was documented, verified, and reported to the credit bureaus. It was a small detail, but it was important. It meant that somewhere in a database in a credit file that Marcus Webb might occasionally see if he was paying attention to the news about my company, there was evidence that a woman in real estate could manage debt perfectly. That self-employment wasn't unstable. That passive income was legitimate. That female wealth was real wealth. That the system could work fairly if people like me forced it to. It meant that the next woman who walked into a mortgage broker's office with her financials in hand would have a fighting chance. It meant that the system was changing, inch by inch, deal by deal. It meant that sometimes the best revenge wasn't personal, it was structural. It meant that I'd turned Marcus Webb's rejection into a platform for industry-wide reform. 3 months later, I was sitting in my office in Manhattan, reviewing the quarterly reports from my newest acquisition and the expansion plans for Coastal Financial Partners, when my assistant buzzed. "You have a call from Marcus Webb," she said carefully. "He said it's urgent. He's been trying to reach you for a week." I considered not taking the call. Then I picked up the phone. "Hello, Marcus," I said. His voice was smaller now. Humbled. Desperate, even. "I wanted to apologize," he said. "For what I said about you. For how I treated you. For the assumptions I made. I wasn't fair. I made judgments based on," he paused, searching for the right words. "Based on things that weren't relevant. I was wrong. I know I was wrong. I could have enjoyed this moment more. I probably should have." The man who dismissed me was now begging for forgiveness. But instead, I felt only a distant satisfaction, the kind that comes from having proven a point completely and utterly. "Yes, you were wrong," I said simply, my voice professional but not unkind. "And it cost you everything. Your job, your reputation, your firm's credibility. I hope you learned something from it. I hope you learned that the system you were using to make decisions wasn't just flawed, it was discriminatory. I hope you learned that there are different kinds of wealth, and just because someone's success doesn't fit your template doesn't mean it isn't real. I hope you learned that women in business shouldn't have to apologize for their success or defend their competence to men like you." There was a long silence on the line. "I did learn that," he said quietly. "I really did." I hung up and turned back to my reports. Outside my office window on the 42nd floor, New York City glittered in the afternoon light. I owned pieces of it everywhere I looked: apartment buildings in Chelsea, commercial complexes in Midtown, land reserves in Brooklyn. Each one a monument to the fact that the only mortgage I'd ever really needed was the one I'd written myself into the history of an entire industry's reform. The mortgage broker who rejected my loan had done me a favor. He'd given me a reason to buy his industry and rebuild it in my image. He'd given me a mission. And most importantly, he'd given me proof that the most powerful response to rejection wasn't anger or bitterness. It was success. Real, undeniable, institutional, transformative success. The end.